Hello and welcome to myfinanceteacher.org. In this video, I want to have a quick look at grains. In particular, we're going to have a look at corn, soybeans and wheat. It looks like all of these three grains have started a new cycle in around late September to early October. The usual cycle duration, again, for all three of these grains is somewhere just below the 4-month length. The average duration is 116 days for corn. The previous cycle lasted for about 123 days. We see a cycle low just after a mid-September, in the second half of September, with a bit of a positive divergence in RSI. That's when RSI makes a higher low versus a lower low on price. Since then, corn has recovered and retested the 50-day moving average, successfully bouncing up from that retest. So far so good. The cycle so far is 33 days long, but as I will mention at the end of this video, there is something to be cautious about. Moving on to soybeans, again, the cycles on average last for around 118 days, an average of just under 4 months. The previous cycle lasted for 133 days, and while RSI didn't really drop down into oversold area, the decline from the previous RSI high all the way at around 78 is significant, all the way from 78 to the recent low at around 34. Again, looking at price, since then soybeans have recovered the 200-day moving average. They are bouncing back down from the test of the 50-day moving average, so time will tell whether over the next few days soybeans will successfully recover the 50-day moving average as well. I think there is a pretty good chance for that. Although, again, if you stay until the end of the video, you'll see a reason why. There is also a reason to remember risk management. For now though, moving on to wheat, where cycle duration is also just below 4 months. The average is around 116 days. All of these averages that I've mentioned so far are since those pandemic lows. The previous cycle lasted for 121 days. That's pretty close to the average cycle duration. And again, while RSI didn't formally drop into oversold, it came pretty close to that at around the level of 31. And that is a significant decline in RSI from that peak all the way back in summer, the peak of around 75. Since then, we see prices testing the 50-day moving average, and while RSI is still far from being overbought, looking at history, even these very mild bounces into new cycles in late 2022 and early 2023, where the percentage gains in wheat prices were very modest. Even back then, RSI increased to at least 61 in late 2022 and even all the way to around 65 in early 2023 before the cycle stopped. So even if this rally turns out to be a relatively modest one, again, there is a quite high likelihood of that, we probably still have at least 1 or 2 weeks of generally upward momentum in wheat. And before we move on to the most interesting cautionary sign, let me remind you that at myfinanceteacher.org we have already talked about grains quite a few days ago. So we are fortunate enough to have the luxury of that risk management, placing the stop losses, for example, somewhere around the break-even point with currently modest profits in place. So for more regular updates on a range of assets, including grains, make sure to join us at myfinanceteacher.org. For now, though, a bit of a cautionary sign. While we have a new cycle starting in all of these three grains, corn, soybeans and wheat, the cautionary sign is that autumn months are usually not particularly great for either of those. Looking at seasonality since 2015, since the end of that previous bear market generally for commodities, we see that while September and October are relatively green for corn, soybeans and wheat, later into November and December the seasonality picture isn't as promising. Corn usually moves downward to sideways in November and into December. Soybeans stays quite attractive all through November, December and into January, while wheat mimics corn in its decline all through November and somewhat sideways in December. So if you are trading grains as we move closer to the end of October and early November, perhaps you want to tighten up your risk management. Have a marvelous Monday. Bye bye.